What happens if you over-contribute to a Roth IRA or IRA? What is an excess contribution to a Roth IRA? In this video, I'll be answering those questions and explaining what to do if you find yourself in the situation of having an excess contribution to a Roth IRA so that you don't get penalized and you actually understand the options you have. Amanda here from the Business Finance Coach, where I'm simplifying finance because the truth is we're more empowered now than ever in history to create businesses and make money. But the very tools that often overwhelm so many are the very tools that empower us to create wealth. If you like the sounds of what I'm offering and you're new to this community, you can subscribe by clicking the icon in the bottom right corner of your screen. Back to excess contributions. So if you over-contribute to a Roth, that is an excess contribution. But an excess contribution is contributing to a Roth anytime you're not supposed to. So if your income for the year exceeds the Roth income limitations, then you can no longer contribute. Now, you get to contribute up to $5,500 per year. If you're over 50 years old, you get an additional $1,000, so $6,500. This doesn't affect if you have an employer or a self-employed retirement plan like a 401k or a SEP or simple plan. This is on your own. You get to contribute this $5,500 or $6,500 to a Roth and or an IRA. So you can do it to both types of accounts, but you can't do more than the limit of $5,500 or $6,500. I'll be using $5,500 for the rest of this video. If $65 applies to you, know that. So how would you over contribute? Well, maybe you thought you could contribute that amount to both and you did. You made a mistake. Or maybe you rolled over an amount on accident. Or what commonly happens, especially for the self-employed, is maybe you were below the income limitation, but your income then went up during the year and you had already contributed the $5,500, or you were contributing on a regular basis and you met the max amount. Now, there is a phase-out range, which means if your income is between a range, then your $5,500 contribution amount will decrease down to zero. So you may be able to contribute a portion, but not the full amount. Or if you're above the maximum income limit, then your contribution amount is zero. And if you've contributed, then you need to withdraw that money. Otherwise, you'll get a 6% penalty tax on your return. Now, you might say 6% penalty if you're like me. Well, wait a second, that's not that much depending on the IRA. It's probably not worth it, but it could be in certain instances. However, that 6% penalty applies every year that your excess contribution stays in and to all the earnings. So it's really not advantageous. You need to pull out any excess contribution. And you have up until you file your current year's tax return to do that, or the deadline of the return if you didn't file or file late. You do that by contacting your investment firm that has your retirement plan and withdrawing. I would recommend talking to them when you do this so that you can specifically explain that this is not a current year withdrawal, which could also have penalties because you're not allowed to withdraw early on certain funds. So they need to be clear that this is actually an excess contribution withdrawal. And it's important to make that clear to the investment firm. The investment firms typically do not understand the tax implications, and they don't report them to you on Form 1099-R. You will get a Form 1099-R that you need to enter for your taxes. These forms are also filed with the IRS, and that's why it's important to enter them. It doesn't mean it will be taxable. Now, I said you had options. You do have options. Let's say you had gotten extra income from your business, but you don't really think that you're going to get that income next year. One thing you could do is allocate that excess amount to next year. But you have to do that through calling and talking to your investment firm and making sure that the amount is allocated to your next year contribution. So that's what happens if you over contribute to a Roth. To recap, if you over contribute to a Roth, it's called an excess contribution. And if you do anything in which you contribute to a Roth when you're not allowed, it's called an excess contribution as well. If you leave excess contribution in your account, all excess contribution plus any earnings will be taxed at a 6% per year penalty fee. You have up until you file your return or the due date, if you file late, to withdraw these amounts. Be sure that you withdraw all associated earnings, otherwise they will be penalized. The other reason you want to get this done fairly quickly is because you're going to get a 1099-R from the investment company. If you do fix this, you'll need to ask the investment firm for a corrected Form 1099-R as well. And do not trust your investment firm about taxes. They don't keep track of your tax basis because they don't know your personal situation and how you file. Well, that's all for excess contributions to your Roth. Be sure to check out my other videos in this retirement series, including how to do a backdoor Roth, which explains how you can contribute to a Roth even if your income is above the limitations. Yes, there's a way to do that, but you have to know it. Be sure to check out that video if you're interested. Thanks for watching. I look forward to seeing you around the channel. Bye.